Gina Sanchez, Lido Advisors Chief Market Strategist. We're going to start with your first buy, which is Ross Stores. February was the 8th positive month in 9 for the off-price retailers. UBS sees it taking share from department store chains amid a tougher consumer picture. Gina, why are you a buyer here?
So, one of the things that we're watching is, quite frankly, there are still some headwinds for sales generally across retail, but there's also now some headwinds for potential margins. And the nice thing about Ross is they are one of the higher margin plays. Retail is not known to be a particularly high margin play, but they have over a 10% operating margin, and that's huge. And when you look at the troubles that they had kind of in the pandemic, securing inventory, just being able to sell things, they have been incredibly very, very cautious in their guidance, and I think they've been a little overly cautious in their guidance. If you look forward, there's a lot of potential for Ross to keep going, and with the margins that they have and the outlook that they have, it's a good combo.
All right, buy number 2 is Target. Negative in the past year, but coming off 6 straight positive weeks. Barclays is seeing strong margin momentum, but it's concerned about the cadence of discretionary spending. Maybe no surprise there. Gina, why upside from here?
Yeah, that's the challenge, is that sort of negative outlook, or the what I call headwinds to consumer spending. Things like higher interest rates, big credit card debt, student payments starting up again, student loan payments, and so all of those things are going to be negative. However, you are seeing some margin expansion that's set to be seen at Target. This is one that Lido Advisors has owned for a while, and we are betting that cost-conscious consumers will go to Target and that they will be able to make their margin on those sales.
All right. And by the way, more to that story, you don't want to miss an exclusive interview on CNBC with Target CEO Brian Cornell tomorrow morning. That's going to be at 7 a.m. Eastern time right here on Squawk Box, 7 a.m. Eastern tomorrow. Brian Cornell. And the final buy is Costco, coming off 4 straight positive months. Baird analysts are seeing some sales headwinds, but sees upside in accelerating comps and a potential membership fee increase this year. What makes Costco a buy, Gina?
So this one is one that's been a shining star. This is obviously a consumer staple, not a consumer discretionary. So all throughout the pandemic, this was a big win, and you could see its outperformance has been massive. And it is also more expensive because of that. I mean, it's trading at nearly 45 times forward earnings. But if you look at the expectations, that increase, the increase in the membership fees, all of that actually still rolls up to very, very strong demand for the sort of bulk buyer, low-cost supplier of food, groceries, et cetera. These are things that are not going away. And this is a company that actually runs a great business. And so we think it's worth it's worth the price right now.
All right. So those 3 buys. Now it's time for the bail, Gina. Nordstrom gaining more than 10% in the month of February. Analysts at Evercore noting sales momentum as the company bets big on its lower-priced Nordstrom Rack off-price stores. Gina, why bail on Nordstrom?
So the challenge is all eyes right now are on Nordstrom Rack, which is their off-price, their competitor to Ross Stores, and other similar off-price. But if you look at the general trajectory of retail right now, luxury isn't back, and that's still a big component of what Nordstrom is about. And so that's a challenge when you have a headwind to sort of your main core business, the notion of sort of marking down all of that and really killing your margin even more. That's interesting, and I don't know that's a big. If you look at the short interest right now, it's actually got about 17% of free float right now is currently, in their short interest. I'm not the only one who sees this as a potential headwind for Nordstrom. The expectations for growth are not that great. They're low single digits.